Traders, FX Pip Collector here. Today is Monday, February 24th, and this is my morning video where I like to take a look at the US dollar pairs, including gold, and we also take a look at a couple of the JPY pairs. If you haven't done so already, definitely join my free Discord trading community, link down here at the end of the video in the corner and in the description of the video. Definitely check out my website, fxpipcollector.com. Also, if you'd like to get access to all these benefits listed below and more. So, anyways, first thing first, I always like to check the news calendar. Not a whole lot on the news calendar today. Mondays are very often very slow days, anyways, in the markets. We got a little bit of German news coming out this morning, but not really a whole lot on the news calendar, at least for today. Anyways, let's start off on the US dollar index. We're still kind of determining whether or not this really is the end of a wave B. It definitely looks like the end of a wave B on the weekly time frame. If it is the end of a wave B, then I definitely would expect it to make a downtrend on these higher time frames, which would probably go down to about the 100% Fibonacci extension of wave A, projected at the top of what I think is a wave B. We still have to be a little bit cautious because we have not been able to close below the 78% Fibonacci retracement of the last impulsive move up. So there's still a chance that this is an a B, and this is a C correction, and that it actually ends up turning back up and making a new high. Definitely still a possibility, at least until we go down and break this low right here, which we definitely have not done yet. So we definitely want to try to keep all possibilities in mind. The trend is definitely down. If it goes up and breaks structure right here, then I would have to switch back and start looking for longs on the dollar. Otherwise, anything I see to the upside, I am definitely still looking at is nothing more than a correction to the downtrend. So, anyways, let's start off on the euro dollar. So, euro dollar is pretty much exactly the same as the US dollar analysis, but in reverse. More than likely, we are in a wave three right now. And if this is a wave three, I would expect it to continue to make higher highs, higher lows, probably all the way up to about the 161.8% Fibonacci extension, because that would be your wave one, two, three projections for wave three is definitely most likely the 161.8. But we had to be a little bit cautious. I mean, there is definitely still a chance that this is just some sort of an A, this is some sort of a wave B, and this is a C, and it actually ends up going back down. For me, watching the US dollar index is what is going to confirm one way or the other. Going down to the 1 hour time frame, definitely a pretty strong little reversal going on this morning, as you can see. But we definitely do not have any breaker structure to the downside. Let me get rid of these lines right here. So we are definitely going down pretty strong, as you can see, but we don't have a breaker structure even on the 1 hour time frame. So we have to assume that this move down, at least until we get a breaker structure, could just be a correction to this last wave up. So if we get some sort of a three-way pattern, any sort of an ABC, WXY, or any sort of a corrective overlapping wave down to a Fibonacci retracement level with an impulsive turn, I definitely would take it as a long opportunity. On the other hand, if it does decide to go down and break below this structure with momentum, not just, break it and spike back up, but break it with momentum, then that probably would turn me back into a seller. But since we haven't done so yet, I am definitely still looking at anything I see to the downside is most likely nothing more than a correction to the uptrend. So moving on to the pound dollar. Pound dollar, same type of thing. I mean, we are very likely in a wave one, a wave two, and we're in a wave three. Most likely target for a wave three is the 161, maybe 178 area, which also brings us back up to these highs, which seems like a really good target for this. Now, just like I was saying about the other pairs, if the dollar does turn up, then this potentially would turn down. So we have to be a little bit on the cautious side, definitely. But right now, this little spike candle definitely doesn't tell me it's going down. It could just be another pullback within a wave three uptrend. So going down to the 1 hour time frame, now we have our Fibonacci retracement on this whole move up right here. If this goes down and breaks this structure, I think I would probably have to turn into a seller if it breaks and holds below structure, that is. If it just rejects structure and then ends up pushing back up, then I would still be looking for longs. If it does decide to go down and take out this low instead of making some sort of a three-way pullback to a Fibonacci level, which it's already to the 78%, so we really don't have many Fibonacci levels left. If it does make three ways to a Fibonacci level and then turn back up, I definitely would take it as a long. If it goes down and breaks and holds below structure, I would definitely stop looking for longs and I would definitely start looking for shorts again. So moving on to the Aussie dollar. Overall, the Aussie dollar is a little weaker than some of the other ones as of now, but it definitely still has not invalidated a 1, 2, 3 pattern. We definitely still could be in a wave three, and if it really is a wave three, I would expect it to go up to around the 161.8, probably up around these highs right here is where I would expect this to end on the daily time frame if it is a wave three. But like I keep saying, depending on what the US dollar does, depends on whether or not I stick to this wave three analysis. If the US dollar breaks structure to the upside, I definitely would stop looking for longs on this and start looking for shorts again. So as of right now, I definitely am still looking for longs though. Going down to the 1 hour time frame is where we got our Fibonacci retracement on this whole move up right here. Now, if we already got one wave down, we already got one wave up. So if we get a corrective wave down to one of these two Fibonacci levels and then an impulsive engulfing turn, I definitely would take it as a long opportunity. On the other hand, just like the other dollar pairs, if it decides to break and hold below structure, then I would definitely stop looking for longs and I would definitely start looking for shorts. So I'm really just following along with my structure. I'm following along with the US dollar index, which for me is a roadmap telling me what to do on every single one of these dollar pairs. Now, breaker structure means I'm definitely looking for longs. A breaker structure means that I'll stop looking for longs and start looking for shorts again. The Kiwi dollar is exactly the same analysis. I think it likely is in a wave three unless the US dollar proves otherwise. I'm definitely bullish. I'm looking for the 161.8, probably someplace up around these areas right here also. I don't really cover the Kiwi dollar much because it's exactly the same as the Aussie dollar. Moving on to the US dollar CAD. The US dollar CAD is actually one of the ones that to me really seems like we should be looking for sorts in a big way. If this really is the end of a wave C, it's most likely the end of a wave B of wave Y, which is a lots of downside potential if that is the case, which it definitely looks like it is. So going down to the daily time frame, I mean, I'm definitely looking for shorts. Doesn't mean that there potentially couldn't be some little rallies on the daily, but as long as makes lower highs, lower lows, then I think it confirms that this is a wave end of a wave C and that we really are trending down. Going down to the 1 hour time frame, very overlapping, slow pattern as you can kind of see. At this point, I honestly wouldn't be surprised if it did end up going back up towards these highs right here. Maybe back up towards like the 50 before it actually goes down. That makes a lot of sense to me, especially because this bottom right here potentially would become a top. You know, tops become bottoms, bottom becomes tops. So I think there's a pretty good chance at this point it probably will end up drifting up a little bit, maybe hitting a fib level before it continues down. Now, for me personally, I don't recommend going long because even though it looks like that on the 1 hour time frame, it may just drift up a little bit. It may just make a lower high, and just continue down. If we really are in that big giant turn on the higher time frames, it's more likely that it will just continue to make lower lows, lower highs doing this. But according to the pattern on the 1 hour, I would assume that it would go up and probably hit the 50% before it does end up continuing down. I just know for a fact that for me personally, I don't think I definitely will not be taking this trade, and I wouldn't recommend anybody to take this trade. So moving on to the US dollar Swiss. US dollar Swiss, a little bit different than the other ones, but for the most part the same thing. Impulsive down wave A. To me, this looks like a, just a lower low ABC crescent, like a ABC with a lower low wave C, like a running ABC crescent. And that would put us in a wave three, which would potentially keep on going down, maybe even all the way down into the territory of wave four, for like a 1, 2, 3, 4, 5 pattern. So definitely still very bearish on this. Definitely watching the US dollar index to help me decide whether to stay bearish or not. Moving down to the 1 hour time frame, we are kind of turning up a little bit on the 1 hour, and I will notice that this is kind of a three-way pattern. So I think there is a chance it might drift up a little bit today, but the question is, will it make like a like another running ABC crescent like that and go down? Or could it possibly turn into like an expanding crescent like this, making a lower low wave B and a higher high wave C and then continuing down? For me personally, trying to go long is definitely not worth it and definitely not advisable. I personally would just be looking for shorts because even though it looks like it could drift up and maybe even take out this high, it might just go up a little bit, make a lower high, make what I would call a running ABC crescent. Like this would be the A, this would be the B, this would be the C, and it just continue the downtrend. So based on the dollar index, definitely still advising to look for shorts in a downtrend. Moving on to gold, I've been talking about this $3,000 target for quite a while now. It's been struggling to get beyond the 250, but I think it will end up eventually pushing up to the 261 because that is a more likely target, I think, for a wave three. So to me, it definitely looks like a one, two, three. It looks like a wave four. It looks like we could be in a wave five right now, but there's definitely no signs of it being over. There's definitely no breaks of structure to the downside. The thing with gold that you really need to keep in mind is that the monthly, the weekly, the daily, the 4 hour, and every single time frame in between is in a strong uptrend. So do not go down to the very short time frames and think that it's a good idea to be looking for shorts. Going down to the 1 hour time frame, if you watched my analysis last week, I said that it looks like this right here potentially could be the end of a correction because it made five waves up, one, two, three, four, five. Then it made what looked like an ABC correction. It did take out the low wave four, just like a ABC correction should. It did hit a Fibonacci level. So if that right there is the end of a correction, then it needs to go up, it needs to break out, and it needs to keep on going up. I definitely am targeting the $3,000 an ounce area. Now, this could end up even turning into like some sort of an ending diagonal or something, which means it would be a very overlapping pattern to the upside, something like that. So I definitely am advising looking for longs. I definitely wouldn't recommend looking for shorts on these sort of time frames, at least until the higher time frames give us some reason to think otherwise. I am targeting around $3,000 an ounce, but if the market tells me otherwise, I would definitely start looking for shorts. Like I said though, every single higher time frame is in an uptrend. So do not go down to these sort of time frames thinking that looking for shorts is a good idea. Just because all the other time frames are in an uptrend doesn't mean that you should be looking for shorts. So moving on to the US dollar yen. I personally am very bearish on the yen pairs. I think every single yen pair is going down to make a big old wave C. I currently have my Fibonacci retracement on here just for areas of resistance. You know, these definitely could be areas of support, I mean, and they definitely could be areas where the market bounces, but I definitely think that there's a very good likelihood that it will continue at least on these higher time frames to make lower lows, lower highs. So that tells me that anything I see to the upside, as long as it doesn't break structure, I would look at any move to the upside as nothing more than a correction to the downtrend. As long as it continues that low high series, definitely looking for sorts in a downtrend. Moving on to the 1 hour time frame. I mean, we are just now starting a push to the upside. Now, if it does break, I would throw my Fibonacci retracement on there. I had this line on here because if it does end up being like a running correction, then it would probably just go up to that area and just keep on trending down. But it might end up expanding. It might end up turning into like more of an expanding correction, you know, something like this, lower low, higher high, and then continuing down. I just personally am definitely not recommending looking for longs because even though it looks like it could push up pretty decently, it might just go up a little bit and then just shoot right down. I would still be looking for shorts every single chance I got, especially at the end of one, two, three wave pullbacks for the continuation of what I think is what I showed you on the weekly time frame, a big wave C, probably a wave C, a wave four. So moving on to the euro yen, exactly the same analysis. That's one thing that I really like about the yen pairs is they're pretty much exactly the same analysis, just a little bit of a different version of it. I think that the euro yen is in a big wave C of wave four. I think over the next several weeks and months, it's going to continue to make this downtrend, making those lower lows, lower highs. So just like the other pairs, as long as it doesn't break and hold above structure, like which it hasn't done yet, anything I see to the upside is most likely nothing more than a correction to the downtrend. So keeping that in mind, going down to the 1 hour time frame is where I got my Fibonacci retracement. If we do get like a three-way push, you know, we already got one up. If we get two down or three down and then another one up, that would be what I would consider an a B, and a C correction. If we get a nice Fibonacci bounce, a nice engulfing move to the downside, then I would definitely take it as another sorting opportunity. Unless the higher time frame breaks that low high series, I definitely am doing nothing on these sort of time frames but looking for sorts in a downtrend, especially at the end of three wave ABC pullbacks. So moving on to the pound yen, just exactly the same as the other yen pairs. I do think there's a very good likelihood we're in a wave C of wave four. I think there's a very good likelihood that these higher time frames will continue the lower low, lower high series. Now, don't get me wrong, that doesn't mean that we might not get a push up on the sort of time frames. I just am saying, as long as it doesn't break structure, any push up I see, I would assume is nothing more than a correction to the downtrend. So going down to the 1 hour time frame, we got our Fibonacci retracement on the last push down. We got impulsive up. We got three waves down. So if this does end up turning up again, especially if it hits a Fibonacci retracement level and then turns back down, that is exactly what I personally would be looking for an entry to go short. When all the higher time frames are telling me to look for shorts, I go down to the shorter time frames and I look for three-way pullbacks. I look for Fibonacci bounces and I look for entries in only one direction. I don't trade in both directions. I only trade in the direction of the higher time frame move. So if I see a three-way pullback, I see an ABC correction, a nice Fibonacci bounce, and I definitely will take it as another sorting opportunity. So anyways, don't forget to join my free Discord trading community. And as always, thank you for watching and happy trading.